Hello everyone, today's video is all about R&D tax relief, specifically changes to the R&D tax relief regime which were announced just last week by HMRC. So what has changed is the rules, particularly surrounding the amount that SME businesses, the SME R&D relief scheme, that they can claim. Why are the changes? Because there's been a lot of fraud going on, particularly with regards to what we call the repayable tax credit for R&D. So you'll recall R&D basically reduces a company's tax bill in one of two ways. It reduces the corporation tax that you pay. If the reduction is so much that it actually trips you over into a taxable loss, then you have a choice of either carrying forward the loss to relieve against next year's, hopefully, taxable profits, or you can surrender that loss now for cash. It's not as good a rate. You get 19% corporation tax relief if you carry the loss forward, or 14.5% of the loss now in cash. But that cash is often crucial to brand new startups engaging in R&D. Unfortunately, a lot of companies have been set up just to exploit these repayable tax credits fraudulently. Businesses being set up, getting the R&D claims, getting the repayable tax credit, and then people doing a runner with the money. So revenue obviously don't like that. It's costing quite a lot to the Treasury. So they've said, okay, from next year, April 2021, new rules come in. There will be a new cap on the amount of R&D that SMEs can claim, which will be £20,000 plus 300% of the total pay-as-you-earn and national insurance liability for the year. So that is the cap on how much you can claim. There is also a provision in there to prevent any pay-as-you-earn and national insurance liability counting towards more than one company's cap. Okay, so this new cap, 20 grand plus 300% of your pay-as-you-earn and national insurance liab, that there is an exemption. There's a carve out for that new cap if you are generally creating or preparing to create or manufacturing intellectual property. And the second exemption from the cap is if the company spends no more than 15% of its qualifying R&D on subcontracted R&D. So they are the two exclusions to the new cap. So intellectual property, IP, it is defined in the legislation, and the companies will need to provide documentary evidence as to why they think this exemption applies to them if they will breach this cap because they genuinely have a low wage bill. The exemption to the cap is meant for those companies who are genuinely undertaking R&D, but they just don't have a big wage bill. So they don't have big NI and pay as you earn. So therefore that cap would bite and would be harsh for those companies genuinely doing R&D activity. So HMRC's guidance says management time formulating plans and making decisions in relation to the development or exploitation of the intellectual property. So you can claim R&D on that management time, which will be in the form of wages. So, like I said, designed to exempt companies from the new pay-as-you-earn and national insurance cap for those who are engaged in genuine R&D activities. So just to recap then, from next year, the SME scheme for R&D, subject to a cap of being £20,000 plus 300% of the total pay-as-you-earn and national insurance liability for the year. Basically designed to combat a lot of fraud that's going on with people putting in these negligible, fraudulent claims and receiving the repayable tax credit and doing a runner with the money. So look out for that. That comes in from April 2021. But as I've said, there are a couple of carve-outs from the cap if you are creating this intellectual property. So do have a look into that. If you like this video, please do subscribe here, and I will see you soon.